Excellent. All right. Let's do this. Let's do this. Let's do this. Good afternoon. If we can get a one in the chat, if you guys can hear what I'm saying, welcome back, or welcome if it's your first time. Working on a little bit of a green day today, and I'd love to talk about that. Do a little trade recap, maybe take a trade here, 226 Eastern Standard. Just missed a -1 here on the ES. See what the Dow's doing. Maybe we'll get a standing order here, see if we can get down to the -1s on the Dow. Before we begin, let me just go through everything that I was thinking about today. Welcome back. Yeah. So Thursdays and Fridays, with my job and stuff, I can't get in here. I actually did take a red day on Friday, small red day, and I took a green day on Thursday. So a profitable week, and then back in the profit today. But yeah, thanks for hopping back in the chat. If you have any questions, please let me know. Coming into today, we were looking at the same levels as I look at every single day. Over here, we had Friday's high, Friday's low. Those are the dotted red and green lines. Then we have in the middle here, we have the volume point of control from the last session. And then today's developing value area, and then the 233. So we are in a bear continuation pattern. We are inside day range, and we opened up with a nice range, 865. That range has not changed, with an ATR of the day of 956. So well over that, as well as the ES on 121.5. So inside our ATR range that we need to make trades. Same kind of setup. I have the exact same chart, high, low. This is the ES. You could tell because it's faded a little bit gray color. If I switch over, we can see the background just so I don't get confused. And yeah, so looking into the day when we opened up, I was looking for value area high, but then even coming up into the trend, but really once we've opened, we've stayed in a nice tight range. I mean, if we think about, we opened up here, this is 930. So since 930, we've been in just this range. This whole grind up was the overnight range. So here are the two trades I took. Let me just put a standing order down here on the -1s.
Order submitted.
Just in case we get to one.
Order submitted.
And then we will come back and I'll show you exactly what we had going on today. So I think that was the other day. Yep, that was Friday. Friday was a mess. Friday's just one of those days where it just dove lower the whole day, and there was just not a lot that I could do. I got caught, and Those are just those days where it's just going to grind the entire day. Those are days that I'm frankly just going to be shit out of luck. So coming in, this was 9:30. The market opened, came back down, and we touched. Now, for whatever reason, I had my my entry for 2 contracts. So it was a little bit weird. When I first entered here under the swing low, I opened and it said 2 contracts, and I was like, what the 2 contracts? That doesn't seem right. And I didn't really even notice until it came back up. And then when I got in for 3 here, I said, oh man, like I'm in for 3. So once I was in for 3, I was like, it's early in the day. I shouldn't have been in for those 2 to begin with. So I covered 1 down here. And then just while I was sorting out what was going on and looking over here at my order entries and things, I was like, let me just get out of this trade. Let me just get a fresh reset. But ended up taking a nice green trade with an exit here for a little bit of profit, here for a little bit more profit, and then down here. And that got me up about $60 on the day, which isn't bad when it's 9:41 and you're up $60 on the day across a multiple accounts. I think I'm now trading, it looks like 12 accounts. So with those 12 accounts, $61 on the day, was feeling pretty good about myself, especially after the red day Friday. Came back down, and here's the shame of it. Like I said, everything is in hindsight, but we came down and we would have actually got that full move that I wanted all the way down to VWAP. And then we pretty much played at VWAP, like I said, in a nice tight range the entire day with not too many entries, except for once we got back up here to the +1, I entered short. As I always do, I'm going to be targeting VWAP again. Took a little bit of heat, nothing crazy, and then we started to flush back down. I think this was like right after Powell was speaking. Powell spoke at 10:30, and he was speaking at Harvard, so like not really going to be dropping huge bombs in front of college kids, like that's not really what he's going to be doing, or he's not going to be taking these difficult questions. So I didn't think there was going to be a major news event, but definitely at that 10:30 hour, I definitely wanted to stay flat on the market. They came down, and then I had to go to class. So this was during like my morning prep period. I was making copies and things like that. And then my bell rang, and I don't trade during class when I'm working. So I was able to take that off, get myself just a little bit more profit on the day. And then we came down, and I missed all this while I was teaching all day. And then came back down to where we're at right now. But towards the end of my day, I did see an opportunity here on the ES. The ES came down and it hit -1, and then kind of hung out, and it was the end of my day, ready to go home. So I think I took another $17 profit here to get me where I'm at right now. Like I said, up about 113 to 117, depending on commissions across all accounts, which makes me happy on the day. I mean, any green day is a good day. Anytime we get $100 and I start working towards that position of payouts where I need 5 $100 days to get payouts. So yeah, that's been the training day so far. I'd love to take any questions you have on it. Leave in the chat or give a thumbs up. Let people know we're in here. Other than that, we're kind of just going to be sitting here. I get my kids off the bus at 3 o'clock, as those returning customers know. And yeah, we'll be watching this and then seeing maybe if we can come back up and maybe test this. We might be able to enter here. We are hanging out right at Friday's range low. So kind of hoping to see a bounce, maybe back up to today's volume point of control. This would be a nice move. It would be a really, really big move, especially this late in the day. We'd be pretty much going from -1 to get all the way up there. We'd have to go through VWAP, which I'm frankly just not going to be doing today. So we'll see what happens. Not a lot going on right now, and that's okay. I mean, I'm somebody that I can deal with a ton of volatility, but I've really liked the markets for this particular mean reversion strategy. I've really liked the last couple months where it just it goes up and it comes back down, and then it goes up and it comes back down. It makes it very, very easy to get into trades and do the things that you want to do. So when you say, so I got a question. How did you come up with that ATR range for applying the mean reversion strategy? So I assume like, well, this I didn't figure this out. This is just the rolling 7-day ATR. As far as me being green lighted to trade, the mentors and the people that I learned from, we like to see a 50% range, mostly just due to statistics, right? If we are less than that, because when I think about what the actual possible range is for the day, if we think about what the average range, what the possible range is for the day, we can look at the yesterday's volume point of control, and then we add the ATR to either side, top and bottom. So with that ATR, where did I squeeze that ATR away? With that ATR, let me just bring that back into here. Being almost, let's call it 1,000 for round numbers. Essentially, this has a theoretical move that it can go 1,000 each way, right? So when I am trading, if we're not at 50% of that range, essentially, if we're looking at statistics, what that's telling me is that we still have a ton of huge moves that are possible. Like we look at Friday, like this is why I took a red day. There was just never any pullbacks. I kept entering, trying to get out and then get back in. It just didn't work. But when we are below 50%, just the amount of swings, and we can kind of see on a day, if we look at the overnight session here on this chart, let me just zoom out a little bit so we can just see a little bit more. It's just a statistics thing. That's really all it is, because that's why these bands expand so much. So when we don't have a large range in comparison to the ATR, right, it will look like, yeah, we're going range to range. But then as soon as the market opens, look what happens to the actual range. And look what happens to the actual standard deviations. So whether that 50% happens at 8:30 in the morning when I'm at my desk, or whether it happens an hour into the session, I just frankly do not feel comfortable knowing that there's just so much potential range that is possible, and I just don't want to take a trade, right? Especially on the ES, that's where most of the back testing has been done. And essentially, once we get to ATR on the ES, I think statistics show it's very, very high, like 80 to 85% of the range is going to stay within those standard deviations 1 and 2. So yeah, I mean, that's the short answer. Thanks for the question so much. It's really just what I've learned, and using 50% just allows the statistics to be a little bit more in our favor. Hey, Dave, good morning. How are you? Afternoon. What is your strategy based on? Here for the first time. Well, welcome so much. So I'm essentially just a mean reversion trader, and I'm using pretty much 2 charts for confluence. On the left-hand side, I don't know when you got here, so I kind of walk through exactly what I'm looking at on this left-hand chart, but this is the 30-minute time frame, and it just kind of gives me an overall broader picture of the market and what the market is doing going into today. Really, when I'm looking at this chart, I'm concerned with yesterday's action and today's action. I don't really look to the left that much further, to be honest, especially on this larger time frame. And then with that, I am kind of using VWAP, which is red right now, and VWAP will be green if we're above it. I'm using VWAP and standard deviation bands of 1 standard deviation and 2 standard deviations for my entries and my exits, always targeting line to line. That's essentially all I'm doing, making my life really easy. If I looked at this on a broader picture, right, I really have a sell order up here as well.
Order submitted.
I have a sell order down here. I only
Order
trade
submitted.
micros, and I'm not going to be in. I'm going to have a buy order down here at the -2s.
Order submitted.
So this is what my day starts looking like with my books. I make sure that I have all these orders on here, and then I just kind of sit around. It's a really, really boring strategy, but pretty profitable, because as a scientist, I have a degree in physics, but as a scientist, I just wholeheartedly believe in statistics and mean reversion. There are definitely markets that are harder to do this in. This market over the last 6 months of when we have been just chopping and trading in a range, I'm pretty much entering and I'm targeting VWAP, or I'm entering short here, targeting VWAP. But once again, I'm using the 30-minute time frame to help me with exits. I don't necessarily use them for entries, but I definitely use them for exits. So for example, right here, I have my 233 trend line. If this aligned with a +2, that would make me even more confident that I can add a little bit of size. Well, let's say, for example, here, we were coming down and I was short, and maybe VWAP was below my volume point of control, I'm probably going to take that exit at volume point of control before it gets to VWAP. And then I use just value areas and things. So not only does the 30-minute on the left give me some areas of entry, give me some confluence, but really give me areas to exit. Yeah, it's a mean reversion strategy. That's exactly what it is. I think the overarching umbrella idea is it's a mean reversion strategy. And then if we were to fine tune that mean reversion strategy, it's a mean reversion strategy that uses VWAP and 2 standard deviations of VWAP. You have any questions about that? I learned this from Rod Casilli. He does a YouTube channel. Future Fanatics. Really awesome channel. And as a guy, me, that was blowing up using minis and blowing up accounts, trading minis and trading the NQ for years. Once I started doing micros and just slowing things down, and it's just been really, really nice. What's your target and stop? So my target is always generally going to be line to line. So for example, if I were to enter here at the +2s, my exit is going to be here at the +1s, with, like I said, some other times I'm going to exit earlier than that if we have a swing low, if we're not ranging that far. My stop losses are generally P&L based and very, very dynamic. So there's a couple ways that I'm going to figure out what my stop is going to be. The first one is maybe when the trade is invalid, meaning I don't have any more entries left above. That's one. I also have a very, very strict loss for the day limit, which is between $240 and $250. I generally will not take more than 50% of that in one trade. So once I get to $150 loss, I click the close button. I don't care where it is on the price. If I get to $150, it's time to get out of that trade for me. I will deviate from that 150 if I'm profitable on the day. I might let things stretch a little bit more. Or the last big stop, like say I enter for the +2s and I start to take a little bit of heat, and I'm like, how much heat do I really, really want to take? Generally, what I'll do is I'll target 1-to-1. So I'll just take my drawing tool here. I'll grab a drawing tool, and then I'll grab a ruler, and I'll just go, all right, I entered here. I come down to here. That tells me that was like a 200 point gainer. So then I'll just come 200 points above that, and I'll make my stop 1-to-1. So that's generally what I'll do there. But usually with the 1-to-1, I am out before I get to half of my daily risk budget. So these are modified Rankos. These are the Ninja Rankos. You could download them for free. They are pretty specific to NinjaTrader. I think there's some other platforms that are starting to pick up these modified Rankos. But the modified Ranko count that I use, so I'm using the brick size is going to be 11 and the offset is going to be 2 for the NQ. And then on here, it's going to be 6-1. So if I just go to my data series, I'll show you. So I have 6-1 as my brick size, and my trend threshold is 1, or my offset. And then I'll load some data. I'm actually going to, you don't want to load too much data because there's a lot of bars and tick data takes up a lot. But yeah, so I do a 6-1 on the MES, and then on the Dow, I use a 11-2. If you don't use NinjaTrader, using when I was trading on like Trade-of-8 or even TradingView, if you use a 5-minute candle chart, with standard VWAP bands is going to be very, very accurate, especially the further on as we go into the day and as we get closer to that 1 ATR, the average true range 7-day. Before I got into NinjaTrader, when I used to trade on a Mac like an idiot, I was just using the 5-minute candle chart, and it was off by like maybe a couple points. No problem. Thank you so much for the questions. I appreciate it. It definitely helps pass the time as we're waiting for this price action to get down into the -1s for maybe one more trade. Remove. Yeah, definitely not an amazingly action, but like, yeah, I don't really need to deal with that much stress. It's very, very straightforward. And the amount of times I've heard over the years just that I just I was just really guessing, and I was trying to like do ICT and do all these other things where I realized I could just use statistics and math, two things I believe in wholeheartedly. How can I use Bookmap? So we do see Bookmap up here on the left. I'll bring it up on a bigger time. I'll bring it up bigger so we can just see. So the way I use Bookmap, once kind of in the same way of the 30-minute chart, is I am not looking to Bookmap necessarily for entries. It's just more of an exit. So this is pretty much my level 2. It just allows me to see order flow, and it allows me to see standing limit orders on the books in a visual way, right? Some people use the DOM. Some people use other forms. I am a picture learner. I'm a little slow like that. So I like to not only see what's coming in and what's standing on the books, but I also like to sometimes look back. I don't use the big bubbles. You can see my bubbles are off here. I can make them a little bit bigger, but like the bubbles are here. I just turn them all the way down. So I think traditionally you have that. And then some people, they filter all these different blues and yellows on their Bookmap chat. I'm looking for the biggest levels. And the way I use this for exit strategies is generally, right now the books are pretty balanced, right? We have huge blocks up here at 590, and we have huge blocks down here at 500, which 500 is a nice round number. They'll call that a psychological level. What I find is that when the books are balanced with huge orders, price will tend to stay in between. I see the Bookmap act more as a magnet, okay? So when I'm looking for price action and I'm like, okay, I might want to, be trading all the way down to here. But then I see that right below that, there's huge standing orders sitting on the book. So let's say, for example, I had my take profit down here at 511. Now it just shifted down. So let's say I have my order down here at 500. So price comes down, but now I see down at 490, there's a huge standing orders. There's a block of standing orders. I'm probably going to hold that trade a little bit more because from watching the Bookmap for a couple years now, it tends to pull towards those zone and towards that liquidity. When it's balanced, like I said, it's not very helpful because it doesn't know, do we come up and take these blocks or do we come down and take these blocks? But many times we will see a large amount of orders that sit on the books down below. See, so when we look at it and we zoom out and we can kind of see down, this to me says that we are more likely to pull down and see 500 by the end of the day and come through all of these orders. Not using them for entries, just using them for additional confluence because I don't have that many indicators on the chart. And this just gives me a real time. And if anything, it generally helps me hold trades a little bit longer than I would if I didn't have that visual representation. To me, yes, you do have to pay for this, but it's just an added tool. It's kind of like the cost of doing business, if you will. Same as paying for real-time data. Like this is where my real-time data comes in. Hope that answers your question. Any follow-ups on the Bookmap, let me know. Yeah, it's been so hard, Dave, to sell options. I mean, you know what's going on with me and Tesla right now. And man, I keep going back to that video 2 months ago now where I said, oh, do we want to be selling cash secure puts on Tesla on Friday the 13th? Yikes. So the VWAP is just for the session. So I have my VWAP set up from 6 p.m. open. But yeah, Dave, back to Tesla. Like every day I'm looking at it, I'm like, literally, how low can it go? I think with the short week this week and the holiday, depending on what happens over the next couple of days, I'm probably going to hedge myself and buy puts on Tesla on Monday of next week if if it doesn't get back around, oh man, now it's almost trading for probably 355 something today. If we don't start pushing upwards, I'm going to start hedging against that cash secure put and working my way and to buying puts on Tesla. But yeah, it's been it's session anchored. So yeah, I mean, I'll open up the view up just so you can see exactly indicators. You can see everything I have on here. So I don't know exactly how big this is on your end. Let's see if I can make it a little bit bigger. So I'm using order flow view up and reset interval on the session. My resolution's tick based. Trading hours, I'm using whatever the data series is. So that's the MYM. My standard deviations are standard 1, standard 2. There's my input series, which is just MYM. It's calculated on the bar close. I guess I could have this calculated either one. You can have it calculated every single tick if you wanted, but on this chart, the bar's closing every 22 ticks, so that's not that big of a deal. I turn off auto scale for this because it's really, really annoying. And there's just the colors of my VWAP ends. I wonder if I did, let's see to see if it makes it a little bit different. I don't think it will. Yeah, no, it doesn't make it any different. Yeah, everything I'm doing is the session. Even over here, we see the volume profile. That's on the overnight session as well. And how I'm using the volume session, I can see it's not my value area, but there's a little bit of a node here that you might be able to see on the volume. So we can see my buy limit here right at the -1s. I need to understand that it's probably going to come through here and it's definitely going to test this volume down here again. So I automatically know that I'm going from 413 down to 374. I'm already prepared to take that heat, okay? And every single time I enter, I'm thinking to myself, where are my adds? These aren't adding to losers if they're in positions where I was going to add anyway. It's really just building inventory. So essentially, depending on the time of day where we're at, I would probably be prepared to add again down here. I would be more inclined to add if we were going to be more in the middle of this range, but we also have the yesterday's low. So what I might end up doing is splitting the difference on my second add where I have this volume here, right? This volume here. And then I have this right down here. So I'd probably just take this and move this right up to the session low, just above it. And that's going to be my second add right there. The end of the day does get kind of tricky. It's one of those things where there's definitely less volume. And we'll tend to see these end of the day, like either rallies or sell-offs. We're at 252 and it started mostly because it coincides with when I got to get my kids from the bus. But if I'm not in a trade by 3 p.m., I'm just going to shut down the computer. I'm going to close my screens for the day and I'm just going to move on to the next day. So essentially we got 8 minutes for this to sell off. And the great thing about the mean reversion strategy that I found, and especially with having these very, very fixed rules, I'm almost rooting for it to get down there. Like I want to be in a trade because the statistics show me so much that being in the trade is more times than not going to be profitable. Now, will we go line to line at 3 p.m.? No. If I get pulled into this, right? If I get entry here, I'm going to put my take profit probably up here around this swing low, maybe even possibly the EMA. I'm going to watch that. I don't think there's enough time in the day unless we really, really get a nice rally that I'll be able to get all the way back up to VWAP today. But yeah, it's beautiful when you're actually rooting on it to go down and fill another entry. Like early in the day, when even we can go back to the trades earlier in the day. Where did I take trades? Here we go. I was rooting for when I first got in. Where's my first entry on the day? Hello today. Oh, here. So like there's a part of me, not so much on this one, but on this one here. When this immediately went against me, I was like, sweet, I might get a second contract. Are we going to go all the way up to the +2s today? And so it's like win-win. It's either we go up and we get some more inventory and then we come down and we take profit, or it just dances around a little bit and then comes back and does exactly what he wants to do. The only times I'm ever really like, oh, son of a bitch, is when I enter when we get down to the 2s, the +1s or the +2s or the -2s, and then it goes against me. That's the only time I ever take any sort of stress. I got to get some background music or something for these live streams, huh? Yeah, see, it's been here since we got on a half hour ago. It hasn't moved. The ES things are really dying down. And that's another thing I can use the Bookmap for. Like I can see when just the order blocks are just slowing down. And especially, like I said, with above and below, I can't see us really pulling one way or the other today. Like maybe going down and seeing, like we're down to 500. Remember a couple minutes ago when we were saying, hey, there's a pretty good chance it's going to come down and hit 500. Here we are a couple minutes later and it went down and hit 500. So like that's kind of, we're looking at this magnet. There's a chance, like I think we might come down and even see through all these 440 and we might be able to get there and maybe get an entry. But 440 is way down here. So when we're looking at the Bookmap, like we need to clear all of this liquidity really down to 420 before we can really think about going back up. So once again, it's just the Bookmap just giving me more information. If I get in at that -1, I know that I shouldn't be prepared for a bounce until all this liquidity is cleared out on the Bookmap. So that's another way, like I'm using Bookmap just to give me more information, or like I said, to keep me in trades longer. I don't have to get all freaked out because I'm like, oh, of course it's going to come back down. We still have a bunch of liquidity on the Bookmap that we need to clear out before the buyers can get back in control and then push it back up. How do I manage consistency rules across the prop accounts? I generally just don't take big days. So, I mean, if we look at today, for example, which is a semi big day for me, like somewhere between 100 and 100 and like a $200 is a very, very big day for me, I would say. So by the time I get some early days in the evaluations, obviously the consistency is higher, but I generally operate at about a 20% consistency anyway. So I don't really need to think about that. The only time you need to be thinking about consistency is according to what the profit target is for the prop evals. So if I know I need $1,500 or for Lucid 1250 or whatnot, I just know that I can't take 40% of that profit target, and then I just stay below that. It's honestly the same as the max loss. I mean the drawdown. I never even think of that because for me to go 4 max loss days in a row, there's something else going on. So I don't think about that. I don't think about consistency. The only thing I've been starting to think about, or has to stay in my mind, in the GOAT funded futures, they have like a micro scalping rule, but that micro scalp is 2 minutes. So I guess for those funded accounts, I have to make sure that when I get in a trade, I stay in a trade for 2 minutes. Dave, thanks for stopping in, bud. I'll talk to you soon. Oh, Mark, thank you. Yeah, it's 2 weeks. Like 2 weeks is like you're getting there and you're really starting to become a believer. And by the time you get to a month, I now like, because I remember when I first started doing this, like I think I'm about 8 weeks in, maybe 6 to 8 weeks in. I was so excited to trade, not in like an I'm addicted to trading way, but I was so excited to trade again because I knew the worst day I'm going to have is my max loss day. But by the time you get to a month and you realize how many green days there are compared, like if we, when you see how many green days there are compared to that one red day, it makes it so much easier to take a red day. Like I've taken red the last 2 Fridays. I'll just show you. And like, it has become just so easy for me to just accept the red day and be like, okay, it is what it is. Like it is what it is, because look, I take these big red days, and yeah, some people would be like, oh my God, those are huge red days. But when you start building this consistency and you're like, yeah, I'll take this 266 there. I got a lot of slippage. That was a fast move. But like at 239, I'm like, when you're making 130, 160, 130. So you can see early on, this was I entered Lucid maybe, I think 3 weeks in. So 3, 4, 5, 6 weeks in. I was so like, I didn't trust the method. And you can see the trust in the method by the P&L, because the strategy has not changed. Everything is the same. So like $28, I was like, ooh, is this really going to go? And then I was like, ooh, 89. And then this probably should have been a red day. Fridays suck for me, man. I should just not trade on Fridays. But then we see the average day start to go up: 57, 90 to 100, 58, 130, 160, 130, 116 today. So like by the time you get to a month, not only are you excited to trade, but you believe so much in the process that you don't need to go on tilt. There's no revenge trading. There's none of that. It's just, all right, take the L today. You go to your calendar and you look at the 15 other days, and you let people say, oh, it's only $100. It's only $100 a day. I can't post today on Instagram. I mean, I don't have a trading Instagram, but like, yeah, it would be really hard to be like, guys, made $117 today. But when I say I got 117 across 12 accounts, it's a pretty damn good day. Especially when half of those are live, it becomes, yeah. I'm glad you're finding success. Stay with it. The days where it ranges, like Friday, if you were able to stay green on Friday, all the power to you. Friday was really, really tough. And I could probably go back and I could probably see what last Friday looked like, just because it was probably another big range day. So Friday, Thursday, Tuesday, Monday, Friday. Oh, maybe it wasn't. Yeah, maybe it was this day where was this the 20th? No, where's the 20th? Oh, here's the 20th. So the 20th, like I said, another day, not as steep as last Friday, but where it just tumbled, and we never got that pullback in. Those days are going to happen once a week, every other week. But for mean reversion, this day here was pretty impossible. It was tough. Unless you were able to get a little bit of move or something early, and you were maybe this in here and you were able to close your charts and walk away for the day, yeah, that was good. But yeah, stick with it. It's dope. It's really, really nice. Especially when you truly, truly start to believe it. Yeah, waiting for the twos is a big deal. And actually, what I noticed on Friday, and if I go back to Friday, I kind of started to get maybe a little bit even cocky, where I wasn't necessarily waiting for, let me go back to Friday quick, show you my losing trades. I started trading in the middle of the bands, and I feel like that just, like these entries here, where I entered here, and then I probably should have just, if I would have been disciplined enough, and like I said, this is why we journal and go back. If I would have been disciplined enough to wait for the -2, right? This was a profitable, pretty much a break-even trade for me, I think. But like here, like why was I in here? Why was I diddling in the middle? Things like that. Or this was a good trade, but look, only at the ones. So I started like, yeah, I'm only going to do the -2s. And then I just got a little bit more confident. And the confidence comes by getting in at the -1s and then doing the math and realizing if it goes all the way down to the -2s, you're probably only going to be in a hole. Like what is going to be your loss at that time? So I'm just going to take these off just so I can do some math, right? So right now, if I get in at the -1s and it goes all the way down, tumbles against me down to the -2s, that's 190 points. So with one micro, I'm down $80. Like, so understanding that math made it so much easier to enter at the ones, knowing that worst case scenario, if it comes back down here again, and obviously if it's tumbling down, this is probably going to spread out, right, a little bit more. But okay, so now it's 200 points. So now you're down $100. You still have about $50 worth of buffer to enter. And if you're somewhere in your DRB and like you don't have that, you just don't enter at the twos again. Maybe it comes up, it pops, you take a graceful exit, you take a $50 loss or whatever, and then it comes down to the twos and you make your trades. But yeah, I totally understand what you're saying, like waiting for those, but I would much rather make $10 a day.
Order submitted.
I would much rather take $10 a day and take very few red days than have these swings where I was making 250 minus 200, up 300, down 600. Like I couldn't hang. I wasn't a good enough trader, frankly. I think that was something hard for me really to do, is like just getting out of my own way and just not letting my ego just take control. So we are at 3:00. I do need to go get my kids. So although I think we're going to come down and hit these plus ones, I need to flatten all my trades for the day. And that is going to be Monday the 30th in the book. Like I said, one more time. These are all sims, and I have trading on a couple of lives as well. But anywhere from 111 all the way up to 121 Bolinox, they don't put the commissions in here. So this is actually, they'll take the commissions out later. Those are my only two Rhythmic accounts. Man, once you go to Trade-Evade, I freaking hate Rhythmic now, man. It sucks. But yeah, thanks so much. And if I can get in tomorrow, I will always try and get in a live stream whenever I can. I'll see you tomorrow. Thank you so much for the questions. If you're watching this on the replay, leave questions down in the comments, and I'll make sure I get them to you. Yeah, I appreciate you guys. I really do. Have a good day.